Hey guys, this was a tough week for the markets, but there were a few stocks that survived. Either they held their ground or they might have gone up a little. And one of those in our watch list, which is a fundamentally sound company, and we're going to look at the numbers for now, is Atrion Corporation. Atrion Corporation, if we could scroll down a little bit, we will see that they are in the medical instruments and supplies industry. They're in the healthcare sector. And as we know, when it comes to healthcare, that's something, particularly in these days, and particularly in this country, is always needed. The worst kinds of things could be happening, but the healthcare sector is not going to suffer that much pain. So, having said that, let's take a look at this company. And Atrion Corporation, surprisingly, it's dropped a bit, but you wouldn't know it from its share price. We're going to go over to Yahoo Finance. We're going to look at Atrion. Just to confirm the current share price, 343.20 is the share price. So, Atrion, and now we're about to see why the share price is so high. Their earnings per share over the last 5 years has been $18.44 in 2018, $19.73 in 2019, $17.44 in 2020. It dropped a little, $18.18 in 2021 on the climb again, $19.56 in 2022. But this year it's back to lower than it was in 2018 at a current earnings per share of $15.34. Now, bear in mind, the year is not over. We still have 2 months left. So this may not be the final earnings per share for 2023. But it dropped back this year. That's presenting our opportunity. Let's look at how this stock has done over the previous 5 years. In 2018, the low price was from $499 to $751. That was 2018. 2019, it was 663 to 887. 2020, it was 559 to 723. 2021, it was $570 to $786 a share. And in 2022, they dropped back a little, $541 to $752. But where is the share price currently? Currently, this year, where a lot of companies seem to be struggling, the share price is at $343. and 20 cents a share. It continued to drop. And where's the PE? 22.37. Now, one thing we say about companies that are on the stock market, all of their PEs can vary. Some companies may drop down to a low PE ratio of 5. Other companies, their PE ratio, companies that are in demand, their low PE ratio could easily be in the 20s. I'm going to go to a company that's in a lot of demand, and we're going to look at their PE ratio. And this is Amazon. Amazon is currently at a PE ratio of 67.23. Now, I'm not sure if that's their low PE ratio, but I just show that to you to say some companies that are in demand, they have a high PE ratio. There's companies I would never touch because of where their PE ratio is. So let's look at Atrion over the last 5 years. Their low PE ratio in 2018 was 27 or 27.10. In 2019, 33. In 2020, 32. In 2021, 31. And in 2022, 27. So if you notice something, based on PE ratio, Atrion Corporation is at the lowest PE ratio that it's been at in the last 6 years, which means in terms of PE ratio, it's at the lowest price that it's been at in the last 6 years. Let's see. Let's look at where this stock can move up to. And first, we'll go to Yahoo's analysts. Yahoo's analysts, they don't give an estimation on where the stock can go to. But we're going to look at it by PE. So, this year they moved up 13. This year 12. This year 9. This year 12. This year more than 12. We're going to do 9. So, 22.37, which is the current PE, plus 9 equals 31.37 times our earnings per share, 15.34 equals 481.21. So, from the current price of 343.20, if this PE doesn't move down any further, this stock could possibly go up to 481.21 in the next 12 months. Now let's look at some of the fundamentals of this company. Their earnings. They're not a big earning company. They're not making billions. So what they're pulling in is not because of how much money they're making. It's because of how that money is being managed. 2018, 152 million. 2019, 155 million. 2020, they dropped back a little, 147 million. But they jumped back up in 2021, 165 million. And 2022, 183 million. Now, after they paid expenses for all of those years, how much did they keep in profit? And what percentage of their overall sales was that profit? In 2018, they had 34 million in profit, which is a 22% profit margin. In 2019, 36 million, a 23% profit margin. In 2020, 32 million, a 21% profit margin. The profit margin didn't drop much during COVID. In 2021, 33 million, a 20% profit margin. And in 2022, 35 million, a 19% profit margin. And let's look at the return on equity for your investment, your return. In 2018, 16.25%. 2019, 15.45%. 2020, 13.36%. 2021, 13.53%. And 2022, 14.61%. So their return on equity is decent. I've seen better, but it's decent. But what's really impressive is their debt to equity. 2018, 9.70%. 2019, 10%. 2020, 11%. 2021, 9% again. 2022, 10% again. They're really handling their debt. And speaking of debt, let's go down to their balance sheet. And we'll see that on their balance sheet, their current assets or their short-term assets, not only does it exceed their current liabilities, but their current assets is almost 10 times their current liabilities. In 2018, 2019, almost 2020, 2021, maybe not exactly 10 times in 2022, but let's look at their total assets and liabilities. And if we look at their total liabilities to the amount of money they have left over in terms of comparing the assets against the liabilities, what we see is that this company can run into a situation like a lot of companies ran into during COVID, where they weren't able to make more money. This company would be able to survive and stay open for years in a situation like that without making more money. However, COVID wouldn't have put them in that position because they're in the healthcare industry. And if there's any companies that were needed during COVID, it was healthcare companies. We see that they do pay a dividend. 9 million in 2018, 10 million in 2019, 12 million in 2020, 13 million in 2021, and 14 million in 2022. There was no change in stock. They didn't buy more shares, they didn't sell more shares. But if we move down, we'll notice that in all of the previous 5 years except 2022, in 2022, they were negative with free cash flow. So that dividend they may have borrowed money to pay out that dividend. But all of the previous years, they was able to pay the dividend from the cash flow and still had enough money to go on. They still had excess money. This company pays a 2.56% dividend yield. The last dividend was $2.15, and an amazing 22.82% of this company is owned by insiders, those who work with or are part of the company, and 66% by banks, institutions, other professional investors. David A. Batat is the president and CEO. He was appointed in May of 2011. And he is the president or chairman of 6 companies in total. And like we said, Atrion is in the medical instruments and supplies industry, healthcare sector. Okay, so now that we've talked about the fundamentals of Atrion Corporation, we want to look a little at the technical analysis, the candlestick charts, both on the weekly and on the annual, the 12-month. So let's start with the weekly, and what do we see? This stock has been moving sideways for quite a while. See it from 2020. This is November of 2020. It's at around 584 here. It's been moving sideways. Here it's sort of dropped below that 500 range. Let's see where it's down to now. Over here we see it around 546, staying in that 500 range. And then all of a sudden, when we get into 2023, we see it drops significantly after about July. Here we have July 17th. We see it dropping, and now we're currently at October 28th. Now we've seen it dropping, but we see a little promise for this stock. We notice that it dropped down, but when it dropped down, it pushed down, couldn't push any further, and it pushed back up to the price. The price that it started with at the beginning of the week, it pushed all the way down, that's around 307, and pushed back up to the current price by the end of the week. Generally, with candlestick charts, that's a promising sign. So what we could be looking for going into this next week is, will it drop again? Or will it now push back up? Because what this type of candlestick tells us is that people were selling. Because what causes a stock price to drop? More people selling than buying. And what causes a stock price to go up? More people buying than selling. So what this tells us is that they were selling, but the sellers got exhausted. They couldn't sell anymore, and the buyers came in and pushed the price back up. So the question is, will it continue in that pattern going into this next week? So we'll be looking for that. But now let's look at Atrion on a 12-month chart, an annual chart. And if we look at it on a 12-month chart, what we see is that this stock has run into some trouble as of late. We see in 1920, COVID year, it took a dive. Previous to this, it was moving up every year, no problem, until COVID year. Took a dive, moved back up the next year, 21, and then in 22, it tried to push up further, but it couldn't, and the sellers pushed it down. Came all the way down. Right, so this is where it started from. This is where it started the year. It went up, sellers pushed it down, came all the way down, and then we come into 2023, and the same thing happened. It pushed up, tried to make a push up, but the sellers pushed it down, and here is where we are currently. So we see it on an annual view, but the question is, what is it going to do on the weekly view? And we saw that we have a positive candle. It's a red candle, so it's still in negative territory. But if we look at the way the candle is structured, it gives us some hope going into this week. So we're going to see what happens with Atrion Corporation. Okay, guys. See you in the next video.